Hello and welcome to another update video about Cardano ADA. We have come down further as anticipated. Yeah, we have come down now to 38 cents. This is sort of further into the direction that I indicated in the previous video. What has not worked out sort of as, I would say, as anticipated is that we have moved up a little bit too much in the wave 4. Yeah. Now, in the previous video, we did expect a recovery in wave 4. The problem is a little bit that we have come down, yeah, you could say too much. Yeah, so we need to change this a little bit. Earlier today in my first ADA video, we talked about the target for this third wave to the downside to be the 38.6 cent level. We reached 38.7, so it was pretty much spot on. From there, you expect a recovery in wave 4. The wave 4 was too strong, so I cannot count this anymore as 1, 2, 3, 4, 5. So what does that leave us? Well, it leaves us basically two main options. The first option is that I count this here as I did, a 1-2 setup, another 1-2 setup, and another 1-2 setup. That is hardly possible, not realistic, because with 3 1-2 setups, you would come down so much that you would seriously threaten this sort of expectation of a wave 1 to the upside and a wave 2 down. So it would be a very bearish setup actually. While this is possible, it doesn't really fit the overall wave count, and context is always very important in Elliott wave. So generally at the moment, my assumption from the low here that we made on the Friday the 21st is that we have a possible 1, 2, 3, 4, 5. So an impulse, it's an impulse to the upside, and that we then came down in a wave A, we moved up in a B, and we're now coming down in a C wave of wave 2. So that this is a larger 1-2 setup, and I expect us to get into the price region between 34.9 and 37.3 cents. Yeah, so this is sort of the ideal level where I would expect a wave 2 to get into. That area is calculated, well, I've got it actually there, based on the 50% Fibonacci retracement and the 78.6% retracement. If we go below the 78.6 retracement, that's by the way at 34.9 cents. I don't think this is still working out as a 1-2 setup. I would then have to change it, and we're probably looking at something much more bearish, and could indicate that we come down even lower than the low from that Friday, so that we also take out the 33 cent level. But this is at the moment not the primary expectation. Okay, well, this 1-2, 1-2, 1-2 setup, as I said, is not too realistic. So I'm going to do something. I'm going to upgrade or change this wave count, which means it doesn't really change the overall assumption, but it just changes the internals. So what I'm going to do, I actually count this here as the wave A, all of this. Yeah, it's a nice pattern that fits the wave A. Then this would be the B wave, and we're now coming down in a C wave. This would be probably quite a short wave C compared to the wave A, but it's sort of, I would say, the best we have here at the moment. Yeah, and then, however, what I would have to do, I would have to take this out, and I would have to put the wave 1 here, I'd have to put the wave 5 here, and I would have to put the wave 4 here, and this all works as a diagonal pattern. With the exception though that I would then have to say that this wave 1 actually peaked over here, this wave 2. So it's a diagonal pattern. It's a 3, 3, 3, 3, 3 pattern where I count each of these waves as 3 waves. It's not an ideal pattern again, but it's a possible pattern as a leading diagonal in a wave 1. Again, it's not a super reliable pattern. Therefore, I have raised my doubts about this as an uptrend already, or the beginning of something much more bullish. But hey, it is what it is. If this is the count though, we have to change the target, and I think I'm going to do that. The target shifts in that case a little bit, and it would actually go into this region between the 50% and the 78.6. So it just changes it a little bit because I'm measuring the Fibonacci levels differently. So here we've already reached the overall target at 38.5 cents. That's the 50% fib level measured that way. We could come all the way down to 35.3 cents. That's the 78.6% fib level, with the next key support at the 61.8 level at 37.2 cents. So that's the next serious level where I think we could have a chance to turn around. Yeah, which is the 61.8% fib level. Let's see. Yeah, but theoretically you have space all the way of the yellow box here. So we can go down all the way to 35.3 cents. It's an interesting pattern, not one that I particularly like, but it is one that we need to take seriously as a potential bullish option. The problem is always when we have a diagonal pattern like this, it is not super likely, and I get always, no, we haven't even, okay, so one more thing to mention. Diagonal pattern, yes, but we're not even cutting wave 1 and 4, so that's fine. In a diagonal, you are allowed to cut the wave 1, the wave 1 and wave 4 are allowed to cut into each other. But hey ho, let's take it like this and see if that could be an option here. That's sort of the best count I have at the moment, really. Not super excited about this. But what I also need to mention is that the first signal that things are changing and we move back to the upside would be a break above the wave B high here at 41.1 cents. Okay, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.